PayPal just filed to become a bank. Big news, right? But honestly, Wall Street might not even care yet. Let me show you exactly why and what would need to change for this to actually move the needle. Look, if you're short on time and refuse to listen to some random cat on the internet, PayPal's bank charter is a permission story, not an earnings story. The stock is sitting at around $60, down roughly 34% from its 52-week high, and it's been stuck in this range for long enough that one should leave it in the garbage. The market is saying one thing: show me the basis points. I'll explain what that means in a second. Hey, I'm DataCat. For those who are new here, this is your former corporate slave, an average analyst at a Fortune 50 company. Traded the fluorescent lights and endless spreadsheets for lasers and keyboards about 5 months ago. Still figuring this whole YouTube thing out, to be honest. My channel's pretty small and I'm not here to hype you up or sell you some course. I'm just a guy who spent years buried in financial models and, thought maybe someone out there might find this stuff useful. And if you do, please smash that like and subscribe button so that my cat and I won't end up homeless. Anyways, today we're breaking down PayPal's Utah Industrial Loan Company filing, and I promise you by the end of this video, you'll understand this story better than most analysts covering it. Not because I'm special, just because I'm going to actually explain a very simple math. Like a cat knocking things off a table, I'm gonna push aside all the fluff and show you what matters. So here's what went down. PayPal just disclosed that it applied to establish something called PayPal Bank as a Utah ILC. That's Industrial Loan Company. Applications went to both the Utah Department of Financial Institutions and the FDIC. Now, what does PayPal actually want to do with this? 3 main things. 1. Interest-bearing savings and deposit products. Think of it like PayPal wanting to hold your cash and pay you interest, similar to what you'd get at a traditional bank. 2. More lending capacity, especially for small and medium businesses. SMB financial services. 3. And this one's sneaky important. Potentially better payments economics. This means getting closer to the card networks, maybe becoming a direct member instead of paying tolls to intermediaries. But here's what we need to understand. This is not PayPal becoming a bank tomorrow. This is PayPal attempting to add a bank charter structure that could, allow me to emphasize on could, change its product mix and unit economics over time. The approval process alone takes months, sometimes over a year. It's like when a cat sits outside a closed door. Just because it wants in doesn't mean the door's opening anytime soon. So why Utah? Why an industrial loan company instead of just becoming a regular bank? The Utah ILC path is attractive because it offers bank-like capabilities. We're talking FDIC-insured deposits, regulated oversight, the whole package, but it's structurally different from a traditional full-service bank holding company. In simple words, more flexibility, different regulatory perimeter. You get the benefits without necessarily taking on all the constraints of, say, a JP Morgan-style banking structure. For investors, though, and this is what most coverage misses, the bank angle only matters if it moves the needles that actually pay the bills. We're talking about funding cost. Can PayPal get cheaper money? Loss rates, will credit defaults stay controlled? Processing expense, can they cut costs on transactions? Conversion and engagement, will customers actually use these products? And scale, can they grow this meaningfully? If those needles don't move, the chart is just a fancy piece of paper, like a cat's college diploma. Nice to have, but simply functionally useless. Alright, next, this is the section that actually matters. If you remember nothing else from this video, remember this part. PayPal processes roughly $458 billion in total payment volume per quarter. That's their Q3 2025 number, by the way. At that scale, 1 basis point, which is 0.01%, equals about $45.8 million per quarter. Let me say that again. 1 basis point equals $45 million. So when PayPal announces strategic initiatives, Wall Street isn't thinking about press releases. They're asking very specific questions. Will this improve take rate by X basis points? Will this reduce transaction expense rate by Y basis points? Will this change credit loss rate by Z basis points? Let me give you some illustrative scenarios. These aren't predictions, just math to show you the stakes. Scenario A. Say PayPal Bank gathers $10 billion in deposits, earns a 1% net spread after costs. That's $100 million per year, about $25 million per quarter. Not bad, but on PayPal's scale, it's helpful, not transformative. Even at $50 billion in deposits with a 1% spread, you're looking at $500 million per year. Meaningful, but still not a game changer by itself. Then we got scenario B, and this is where it gets material. If the ILC helps PayPal reduce transaction processing expense by just 2 basis points, here's the math. 2 basis points times 458 billion equals about 91 million per quarter. That's 366 million per year in cost savings. On the revenue side, if product mix improves take rate by 1 basis point without offsetting costs, that's 45 million per quarter, 183 million annually. You see why Wall Street keeps saying show me. 1 to 5 basis points sustained improvement is the difference between a nice story and an actual earnings re-rate. But we got scenario C, the credit risk, a double-edged sword. If PayPal expands lending through this bank charter, investors will watch whether it improves merchant retention without raising loss rates. Credit can just as easily become a bear case accelerant if losses rise faster than revenue. This is why the market stays skeptical until they see proof. Now let's look at what the chart is actually telling us, because narratives are nice, but price pays the bills. As of December 15th close, PayPal sits at $60.74. It's trading below every major moving average. Below the 20-day EMA at 62.17. Below the 50-day SMA at 65.77. Below the 200-day at 68.36. Both the 50-day and 200-day slopes are negative. The longer-term drift is still bearish. Position in its 52-week range about 13.5%. That means it's near the lows. The drawdown from the 52-week high is roughly 34.7%. Momentum indicators, RSI around 41, that's weak but not washed out capitulation. Money flow index around 51, basically neutral. On balance, volume slope over the last 20 days is negative, suggesting distribution, not accumulation. One interesting signal, the Bollinger Band squeeze is on. Width percentile at about 11.5%. Again, compression like this often precedes a big move, but, and this is important, it doesn't tell you which direction. The last daily candle, bearish engulfing. Near-term signal is down. There was a gap that faded, meaning buyers couldn't hold it. Key levels to watch. Immediate support around $60.16, then $58 as a psychological floor. To flip bullish, price needs to reclaim 62.17, then push into the mid-60s. The technical takeaway here is still a prove-it chart. The squeeze warns a move is coming, but the trend says don't assume it's up until price reclaims those levels and holds. So here's your actual homework if you're watching PayPal. Forget the headlines. Watch for these specific things. Customer balances and deposit growth with clarity on funding costs. Transaction expense rate improvements, even 1 to 3 basis points sustained matters. Stable or improving loss rates if lending expands. Take rate stabilization or mix improvements without volume trade-offs. And last, any concrete disclosures on network membership or routing economics. My stance stays wait and see. The ILC move can be strategically important, but judging by PayPal's performance and history, the market will only pay for it when it shows up in the numbers. 3 months ago when I covered this stock, it was around the same range. The show me story hasn't worked yet. The chart agrees with the skepticism. Compressed, below declining moving averages, bearish near-term signals. You might see a small pop on this news, but it doesn't validate direction. Remember, patience is utterly important in this case. Alright, that's it for today. If this helped you understand PayPal's situation better, maybe consider subscribing, or don't. I'm just a cat on the internet. DataCat out, and I'll see you in the next one.